We want to continue to speak about the bigger picture. Dale Smothers is with us, President, CEO, RDS Wealth Management. Good afternoon to you, Dale. Some of your thoughts on what's going on here in the market.
Yeah, just like we were talking, the market has great opportunities to continue to grow. You see earnings continuing to go higher. A lot of what we are seeing in the market reports is showing that people are still wanting to shop. There are a lot of opportunities, but the consumer confidence wanes. And in my opinion, that is because of a lot of uncertainties that are headed this way. We are entering into October, which is what I like to call financial winter. And we talk to our clients about making sure we can weather the storm in this financial winter that comes every October. Couple that with an election that will yield some sort of positive or negative reaction, perhaps from the market. I think we've got a lot of turbulence along the way over the next 6 to 12 months.
So turbulence, are the markets overvalued here or priced exactly right?
Wow, that's a really good question, Nicole. I like to say that valuations are full right now. I share a sentiment with Jamie Dimon, who said that market valuations right now are priced for perfection, which is a scary thing if you're an investor in today's market, especially if you're entering into or already in retirement, because a lot of things have to go right. Everything that's going on in the Middle East has to settle with no real trouble. Everything that's going on in the far western or the far eastern part of Asia has to settle with no trouble. We've got to see a soft landing take place with the Fed, and we hopefully will see AI continue to spar the market higher. All of these things have to be just right for valuations to be where they are today, and I just don't quite buy into that picture.
All right. So that being said, if you expect this sort of back and forth action or maybe a pullback a little bit, is there opportunity there? And what would you step in and buy? I mean, you have to have some confidence in certain names or sort of trading ideas.
Sure. So I do believe there's opportunity. There's a lot of mixed signals right now with the Fed kind of transitioning to the second half or the other half of their dual mandate. I'm a little bit perplexed as to what they see in the labor market at this point in time. But if we do see a recession take place, there is a really nice opportunity to perhaps speculate on a stock like Dollar General, who has just seen a near 30% loss in one day. Dollar General is a stock that I think has a lot of upside potential, and it is quote unquote recession proof whenever we think about where you're going to buy your goods in a recession. In this area, Dollar Generals are popping up everywhere, and I think that might be a good place to put a little bit of money. Long-term buy and hold, I still think Microsoft's got an edge when it comes to cloud dominance. The cloud dominance that we see in the Microsoft stock is second to none. They also have this reoccurring revenue model that I love when it comes to long-term buy and hold strategies. And Nicole, here at RDS Wealth, we are also using buffered strategies during this time of turbulence. Things like perhaps POTC, which is or POCT. It's the buffered option that you can purchase at the 1st of October that gives you 15% downside protection in the S&P 500. And you still get a healthy dose of the upside participation if the market actually continues to climb.
Yeah, understood. POCT. But going back to a name like Microsoft, and you think about the Mag 7, you said for the long term, Microsoft is a good name. Would you say many of the Mag 7 names might be good for the long term or not necessarily?
No, I certainly believe that a lot of the Mag 7 is a good long-term buy and hold. There are a couple, perhaps, that we may see the infatuation run out just a little bit. NVIDIA is one of those names that I feel like if the bubble pops, it could pop big, and it could leave a lot of people holding the bag. So NVIDIA is something that we've got a little bit of exposure to, but we're not sold out to a stock like NVIDIA. You take the Mag 7 in general, I think it's a good place to put some money long term, but Microsoft and Apple in the Mag 7, perhaps a little bit of Amazon would be my top three of the Mag 7, Nicole.
I see. Okay, so that's really interesting. And for the Dollar General, it brings me back to the consumer. You said maybe more in the near term because so many were opening new stores, and folks have been just a little more conscientious where they're spending and how they're spending. And the question is that sort of somewhat temporary or a longer trend?
Yeah, my opinion is that Dollar General has a really good upside potential over the next 6 to 12 months due to spending habits. And Nicole, this leads to this priced to perfection theory that, Dollar General posted a little bit less than stellar earnings, still a decent report, but a little bit less than stellar, and it fell nearly 30% in one day. You see that in stocks like NVIDIA, which you mentioned. It still had a good earnings report, but wasn't as good as what we were expecting. And for that reason, NVIDIA recently went through a sell-off. It's climbed back since, but this type of turbulence is what an investor should expect to see over the next 6 to, say, 12 months in the market.
What about the JP Morgan Exchange Traded Fund Trust that you were looking at? It's an equity premium income ETF.
Absolutely.
Right there, you had that ready. JEPI.
Yes, ma'am. The JEPI position, I think, is a good play for those who are looking for income. This combines not only dividend income from blue chip companies, which is a powerful play in our portfolio across the board, but it sells covered calls against those stocks. Covered calls against stocks that may be sideways or maybe a little bit down in a down market. You're still getting the yield from the dividend and from the options premium. This is a powerful income play as long as you're okay with a little bit of volatility in the underlying stock valuation itself.
Yeah, understood. All right, and then as going into the election, trying to, when you're a wealth manager, you have positions in the portfolios. Is there anything that you're going to change, or right now you're just waiting for the election to happen and see what happens in Congress and how it all works out, and then you make the changes? Or is there anything, if one over the other is selected to be president?
Very good question. We have fielded some questions from clients about should we be making changes right now. I think historically, making drastic changes based off of politics is a bad idea. It's policy that matters, not politics. If we see a split house, I don't know that we're going to see as many radical ideas on one side or the other that have been discussed actually making it through. Now, if that were to be the case, if we were to see things like capital gains being taxed, although they were unrealized, or maybe even seeing the deficit be skyrocketed in one way, which is never a good thing, right? The $4+ trillion, if I'm not mistaken, I saw recently on some of the proposals coming from one side, the deficits could hurt the economy. Either of these two things on dynamic polar ends of the spectrum could impede the growth of the market. And for that reason, we will make micro adjustments along the way. But to answer your question, I don't think it's a wise decision to go in and assume that anything that is promised on the campaign trail actually comes to fruition day one. And for that reason, we are waiting this one out.
Okay, Dale, very interesting because the campaign trail is one thing and policy that actually is going to pass is another. Dale Smothers, President, CEO, RDS Wealth Management. Good to see you. Thank you.
Thank you, Nicole.